In recent times, there had been a national debate about the borrowing behavior of the Nigerian government amidst rising debt profile in the country, which continues to spread worries and fears in the minds of an average Nigerian and, of course, economists and other professionals in the country. Recently, President Muhammadu Buhari requested the National Assembly to approve for its $4 billion and 710 million euros. The president is also seeking the nation's legislature's approval for a grant component of $125 million in the 2018-2020 external rolling borrowing plan. According to the president, the fresh loans, when obtained, will stimulate the economy and create jobs. Amidst these borrowings, Nigeria's total public debt stock is now at 35.47 trillion naira as of June 30, 2021. Well, the question now is, shouldn't we be worried? Well, we've been talking about this for some time, but today, head of retail investment, Chapel Hill, Denham, Mr. Ayodeji Ebo, will be helping us understand this. Mr. Ebo, thank you very much for your time.
Yeah, thank you for having me.
Yes, let's start with the figures given to us by the DMO. We are now doing 35.47 trillion naira as of June 30, 2021. Should we be worried as a country? Before we talk about the additional borrowing, yes, you could say it's in the expenditure plan, but do you think that we should be worried in any way?
Definitely, we should be concerned. We should be very concerned because it's becoming unsustainable. We need to picture it like a company. If you cannot drive your revenue, which is what we call your top line, then you need to do something about your cost. Borrowing to fund your cost would just put you into more problem. And now coming down to the government, when you look at the actual performance, even as at May that has been published this year, you would see if we assume that the revenue that has been made, if we take that as a proportion of the debt servicing, is around close to 80 or 90, around 90%, which shows that we are not effectively using even the revenue that we're making, which is the major concern. Productivity is the major concern here. So we borrow and mostly is used for recurrent expenditure. It will not yield results. When you look at actual budget performance, you would see that in terms of the capital expenditure element, which should be the productive sector, is currently less than 20% has been allocated. I think about 1.3 trillion naira has been allocated so far to capital expenditure. This is the one that benefits the populace. This is the one that can drive inclusive growth. So continue. Yes, borrowing, we can say, is not bad on its own, but it should be totally directed to productive sectors. I always like to make an example of the Sukuk bond. We can see how the Sukuk bond, when it's raised, has been ring-fenced and tied to projects. If we actually want to be sincere and we want to grow faster, we should use this kind of model. Whatever we are borrowing, we should see and link it to the project, handled by a custodian, and is disbursed based on project achieved so far, or mileage achieved based on the project. That will reduce the leakages as well as improve the performance that we'll be able to derive from even the little resources that we're generating. We have not been able to grow revenue significantly. So it also calls for concern. When you check the medium expenditure term framework, you would see expenditure being grown from 13.5 this year to about 13.9 to about 15 trillion. That has continued to increase. But what will fund it, the revenue, has remained almost at the same level as being projected. So it means that the gap will continue to increase and will have to fund it. Government needs to look for other means to do this funding, especially for projects. We don't have that resources to do that. And that is why we need to focus. Government needs to look at what can we do in terms of tackling this insecurity. Foreign direct investment that should be providing that support has gone so low. It's remained around $1 billion and maybe lower this year. Those are the sources of funding that would help reduce government need to borrow to fund capital expenditure if we're able to get more of that foreign direct investment into major critical sectors. Government can also exploit more public-private partnership. These are the avenues, and a lot of assets that are not even yielding any return. So there's no point you continue to spend more on those assets or assign resources to those assets. So if we don't do this, I think we'll get to a level that when we budget, total revenue, even from the budget, total revenue as a proportion of the debt servicing would be very significant, maybe going to about 120, 130%.
Very good one there from Mr. Ayodeji. Mr. Ayodeji, now I know you identified that in your remarks, talking about debt to service revenue ratio that's standing at about 98%. That's debt service to revenue ratio. It's really unsustainable, and experts have said that, and I think you also agree that it's unsustainable. But some are saying that governments could also sell some dead assets and could make as much as $900 billion US. Do you think, or 900 billion naira, I beg your pardon, do you think that is also a way to go?
Definitely, I totally agree that it's a major source of funding, source of revenue. There are a lot of assets. Some of our refineries that will continue to spend resources on are not yielding any results. Like they always say, there's no government does not have any business in business. Most times, it's not working for us in Nigeria. So we don't need to continue to control companies or control resources that we know that we really can't guard against. So there are a lot of assets that we can divest, even for some of the major assets that government have controlling interest. If you need resources, you can reduce your interest and you sell a bit of it so that you can be able to free resources for yourself. So government we need to be realistic with ourselves. This will continue to impact on our growth negatively. Because if you look at it this way, the resources that we're supposed to use to grow the economy, you move it to debt servicing. So if you understand debt servicing properly, it means that we are not even talking about payment of the debt, which what government do regarding that, what they do regarding that is that they create a sinking fund. So if we are looking at debt servicing and it's about 98% of our actual revenue, then when do we begin to pay down on this debt? These are major areas that government needs to look into and look for alternative. It's not, we don't have to borrow to fund everything. And for most of these projects, we don't even have to spend a dime. We can outsource it, create confidence, because what is happening is some of the projects that government are also trying to pitch or create, because of what has happened in the past, reversal of policies. We need to begin to create that confidence so that when government have projects, they have initiative, there will be a lot of interest and people will be able to fund it. But as long as we don't honor in terms of enforcement of contracts, we don't provide that confidence, and we reverse policies as we like, then it will also be very difficult to get people to help us out with these projects without spending our time. What government is supposed to do is create the environment so they can use those resources for more, they can use the resources for more opportunities that will yield better results.
A very great stuff there from you, Mr. Ayodeji. Now, when we have a challenge like this, which obviously is a revenue challenge, I think what should be done is to look for ways to bridge this gap to get more revenue, obviously. And if we need to get more revenue, we need to take some drastic measures. And one which we've always talked about is blocking leakages and at least cutting all of this unnecessary spendings and all of that. Now, how well do you think we are trying to manage costs, improve tax systems, and do all that is necessary that can help us get more revenue? Is the country, are we moving towards that line?
Yes, I think the records can speak for itself. I don't think we've achieved a lot. So when you look at the revenue from, I would say, revenue from non-oil sector, you would discover that apart from the VAT, apart from the VAT that is significant within that bucket, we are still, the independent sources, the revenue from the government have not been improving. So there still needs to be a major rejig to look at those processes. And how you can block those leakages is using technology. If you can automate and use technology from the point of receipt of those funds to the point of disbursement, you'll be able to see a trail, and that will reduce leakages within that space. But beyond trying to increase the revenue, and if we know we have not been able to achieve that, then we need to look into our costs. Personnel costs, yes, it's a very, I would say, very delicate area or very controversial area to touch, but we need to be very realistic. Cost of governance is very significant. So when you look at the personnel cost as a proportion of actual revenue, can be as high as 70%. So definitely we are overtrading. We really don't have the resources to fund government. So we need to see what we can do about that. And that is why the capital expenditure is always at the receiving end. Projection for this year for capital expenditure is about 30% of total revenue. But by the time you see the actual performance, maybe as low as 20%. Because once the recurrent expenditure or the non-debt expenditure is not, there's a challenge in financing that, then the one at the receiving end will always be the capital expenditure. So I think there's a lot, we need to do a lot of financial engineering in terms of bringing down our costs until we're able to achieve significant improvements in our revenue. If we are not able to identify sources where we can fund our budget without borrowing, then we'll need to cut down on our costs.
Another argument is that when you borrow for infrastructure projects like you talked about, that we don't really need to borrow to pay salaries. I'm not also excited whenever I hear that. But if it's for infrastructure, health, agriculture, railway lines, transportation development and all of that, would you say that it is worthwhile or is worth borrowing if those are the channels, or if they're channeling all of these funds to infrastructure growth and development?
I think for me, I think at this level, it's not sustainable to also continue to borrow for infrastructure. Yes, if they are borrowing, if they can use it mostly for equity contribution. So what I mean, breaking that down, is that if I have a project, if Lagos to Ibadan, which will cost about 200 billion, I can partner and just contribute 20%. So you would see that the multiplier effect of that fund. So I'm contributing just 10% to fund a 200 billion naira road. It means the private sector takes over. Because we don't have these funds, the best way would have been to fully give it to them to build, to operate, and they can transfer data to us. The PPP arrangement has worked in many developed clients. Government just needs to create their environment, look at those laws that will provide confidence. If we need to look into the enforcement of contracts, that we don't have to be reversing contracts when we have allocated it to private sector or you cancel, then we will be able to attract more investors. There are a lot of funds looking at investment across Africa, but other countries are the ones that are those that enjoy the most part of these funds. So borrowing for projects, yes, it's not bad, but because of the condition, the situation where we are, we either just borrow and use most of it for equity contribution, not more than 20% in any major project, or we get people to come and sort this, take over this project for us, build it, operate it, and if we need to have it later, we transfer it. We just need to just get experts, because what some area of concern for people is, how do you agree on the favorable terms on behalf of Nigerians? We have PPPs has been very successful in very developed climes. You are talking about building hospitals, building infrastructure. And I know Nigerians will be willing to pay when they see quality, when they see good roads, when they see good hospitals. They would be able to pay, and it will also reduce even the demand for FX for a lot of, for tourism, would reduce demand for FX for a lot of stuff.
All right, on a final note, yes, the APC meeting started today, and we expect the CBN governor to be out tomorrow to read out the resolutions. A lot for them, a lot to grapple with at this time. I don't envy the CBN governor. I don't envy members of that committee, because there is a lot, from forex to other issues that we are contending with at the moment, inflation on the downward trends. What do you think would be topical? A lot of topical issues, but what do you think would actually shake that table today?
I think the issue of the FX will still be the elephant in the room. And we'll be expecting, like we saw at the last meeting, that there was a major policy that was taken regarding the FX. And when you look at it, between that last MPC meeting in July and now, we've seen significant movement at the unofficial market. So there needs to, we'll be open to get the policy to see how we can, how the CBN or the MPC wants to correct this gap that we are seeing between the official window and the unofficial window. Because when you look at the unofficial window, there's still a lot of businesses that still depend. For those that don't have access to the official window, we have the 44 items that still been banned, and those businesses still depend on the unofficial window. So we'll be hoping to hear a major policy that would help turn the tide, and we'll be hoping to see a convergence before the end of the year.
It's a good way to leave it there. I've been speaking to the head of retail investments at the Chapel Hill, Denham, Mr. Ayodeji Ebo. Thank you very much for your time. It's always interesting talking to you. We appreciate this.
Always my pleasure. Thanks for having me.